Westerly Community Credit Union, and I'm here today with our mortgage originators, Jeannie Abate and Jeff Vandervorst, and we're going to speak to you about types of mortgages and the process of applying and getting a mortgage. Jeannie, there were so many mortgages I looked at when we started this process that rather than spending 24 hours speaking about every kind, I thought maybe we'd narrow it down to maybe the top few.
Sure, we can do that.
So if you could just kind of briefly go over what a fixed rate, adjustable rate mortgage, and first-time home buyer programs, we can get started.
Sure. Fixed rate is great in that the rate is fixed for the entire term of the mortgage. We can go from anywhere from 7 years up to 30 years. Adjustable rates are good programs for certain buyers. Not everyone is appropriate for a fixed rate mortgage. The term is fixed for a period of time and then it can change up or down during the next interval. So that would be a great program for someone who needs a low starting rate, who can qualify for more of a mortgage, or someone who is not planning on being in their home for a great amount of time. Those are typically good for that. And then we have our first-time home buyer program, which also can be fixed or adjustable. And we have different means for those programs as well. We have like little or no down payment. Funds can be gifted. There's a lot of variables for a first-time home buyer. And a first-time home buyer is a person who has not owned a home in the last 3 years.
Not just newlyweds?
No, just
nice.
Someone who hasn't owned a home in the past 3 years. So it's a good program.
Jeff, why don't you give us a brief review of jumbo loans, VA loans, and maybe some other programs that you find popular?
Sure. So in addition to some of the terms, fixed rate, adjustable rate, and whether or not you're a first-time home buyer, you'll want to look and decide which mortgage program is going to be best for you. So we look at jumbo loans, which are any loans, loan amounts that are financed over $424,100. That would be considered a jumbo loan. Then you have your standard conventional loans, which are $424,100 and below. Typically Fannie Mae and Freddie Mac are those conventional loan programs. We also have VA loans, which are for the veterans. One of the best programs out there. There's no PMI. If you're a disabled veteran, God forbid, they exempt you from their funding fee, which is nice. And their rates are typically the most competitive out there.
Wow.
So it's a very good program. USDA is another great program. It's more for rural development, but a lot of Rhode Island is actually covered, so it kind of flies under the radar sometimes. But that's a no money down program on purchases, 100% financing. And so there's a lot of different programs, and what you'll want to do is check with your mortgage originator, because each one will carry a different down payment requirement, different interest rates, and some other things. You know, PMI will have to kind of be adjusted on some of the different loan programs as well. So, but there are a lot of options, is the bottom line.
Yeah, I think that's what was so interesting when I was looking into this is that you really truly can find a mortgage to fit that individual's need. There's that many programs out there.
Absolutely.
What should I bring before a mortgage process? Should there be things I should be working on before I even come to see you, or what will I need to bring the first time I come see you?
Well, we set up an appointment with a prospective buyer. We will let them know what documentation we may need up front, typically pay stubs, tax returns, bank statements. And then we actually meet with them and we fill out the application, and then we go over the programs with them and see which one best fits their needs. And sometimes it takes more than one meeting because we're not quite sure where they're getting the money, whether they need to give funds or work on their credit a little bit. There's a lot of different things that we only know when we meet with people. That's why it's important to meet with your mortgage professional prior to the application process.
Some of the basics that you can anticipate bringing to that appointment would be things such as your income, W-2s, pay stubs, and your tax returns, especially for self-employed people. So that's really going to help the mortgage specialist calculate your income and figure out what you do qualify for. You know, so typically we look at a 2-year history, and that's about it. We don't really go beyond that too much. Sometimes, like, there's a tax credit out right now for first-time home buyers, they'll go to a 3rd year of income verification. But other than that, typically keep it to 2 years.
What about debt? We talk about student loans all the time in here. Between student loans and credit card debt, how much does that affect getting a mortgage?
So when it comes to your obligations that you're responsible for paying every month, we look at debt to income ratio.
Okay.
So how much of your bills is how much of your income is going out towards bills every month. It has to be under a certain percentage in order to qualify. And that's also how we determine, how much you're eligible for. 100,000, 200,000, 300,000, so on and so forth. All of that is based off that ratio. So it has a very big effect on the process.
So we look at all of this before the application is even completely submitted at this point. All this stuff needs to be created or brought forward and looked at, and then I would know at that point how much house that I can afford. Then I apply. What
Absolutely.
happens then? How long does this process take once I have given you my application?
Okay, so you found a home and you've applied for it. We have a purchase and sales agreement. So we meet with the borrower and we fill out some initial disclosures, which are required by the federal and state agencies. We complete the application package, which is a great amount of documentation that we require for the whole underwriting and processing part. We order the title report, we submit it to processing, and the processor will order the appraisal report. And then they go over the income documentation that we have presented and make sure everything is there. And then it will go to the underwriter, who will analyze the income and let us know if there further documentation is required. So typically the process will take 3 to 4 weeks. It's initially it's all upon the buyer and the borrower to bring in the documentation, and then it becomes our process. Right, Jeff?
Absolutely. So once you get past that initial influx, a lot of it, as she mentioned, the appraisal, title work, all of that is done on the lender's side. So really it's a lot of waiting around, unfortunately. If you're a buyer, even if you're refinancing, same thing.
It's
Get in touch. The bottom line is if it's gone, say, a week, and you're wondering, is the appraisal back, so on and so forth, reach out to the mortgage specialist,
Just find out where you
and
are in
find
the
out.
process.
Absolutely. That's what
Right,
we're
exactly.
here for. Call and ask us any questions that they have.
Okay.
Always
Worst
welcome.
case scenario, I get turned down. Besides having a good cry, what are my options?
We'll cry with you. But then we'll look at the reason for what happened, why the loan was denied, whether it be a credit report problem, or whether it be income, or whether it be assets. We typically meet with the borrower and go over ways in which they can improve the reason for the denial and ultimately get themselves into their home.
Thank you guys very much. It's a big, broad subject, so we encourage you, if you're looking at thinking about having a mortgage, to go to your local credit union. If you have additional questions, contact Jeff and Jeannie. They'd be more than happy to answer any one of them. But thank you, Jeff Vandervorst and Jeannie Abate, for your time today, and thank you all.